Thank God it's Friday. Welcome to the final episode of Business Morning for the week here on Channels Television. Good morning. I'm Ini John McFarwell. Yesterday, the Central Bank Governor, Mr. Godwin Emefiele, announced a $200 billion repatriation for exporters, which is expected to run between 3 to 5 years. The initiative, according to Mr. Emefiele, targets increased export value addition and improved foreign exchange for the government. Another segment of the plan includes a non-oil rebate scheme, a central warehousing scheme, as well as a concessionary and long-term funding for non-oil export as well. The CBN governor also revealed that it will stop the sale of foreign exchange to deposit money banks by the end of this year. Consequently, banks will be expected to source for FX from export proceeds. Well, we think about what implications this will bring to the ecosystem, the financial ecosystem. We have Mr. Bismarck Rwani, the Chief Executive Officer of Financial Derivatives Company, joining us now to help us understand some of the things to expect. Good morning, Mr. Rwani. Thank you so much for joining us.
Good morning for having me.
So help us to understand what the CBN is trying to achieve by redirecting the banks to export proceeds for FX supply.
Well, I think you have to understand it from three dimensions. One is what the aspiration is. It's a very audacious aspiration to seek to achieve $200 billion in 1 year or 2 years, for that matter. One is to see what the aspiration is. Two, to see what exactly is the position today. And three, let us look at it in the context of this value of the currency. By the end of the day, the value of the currency is what matters most. Now, let us, $200 billion. What is the current position of Nigerian exports? Nigerian exports in 2022 at best is estimated to become $61 billion. Of this $61 billion, 75% of it is from crude oil. 13% of it is from natural gas, and 12.6% of it will come from other commodities, i.e. cocoa, cashew, soybean, and to some extent, some other items. Now, what we are saying, and what the central bank is saying, is that back out the 75%. So the 13 plus 12, that is the 24% today, will generate $200 billion, which is 3 times or 4 times what our total export is. So it's a very tall order, but it's good to dream, and dreams become true eventually. But let us look at it. What exactly would this mean to you? Because I'm coming back to the point of stopping the sale of foreign exchange to banks. What it does mean is that the normal transition from a frontier currency, which is what Naira is, to a convertible currency, it goes through 3 stages. The first stage is that you have an auction. The second stage is the auction becomes an interbank market. And finally, you have both current account and capital account convertibility, which means that you spend your Naira anywhere in the world. And that it will reflect the true value, true market value of that currency without any restrictions. Now, to achieve this, what the central bank is saying is that we will harness gas, we will harness cocoa, we will harness gypsum, we will harness soybean, cashew, and the export proceeds that will be repatriated should be enough to meet the demands of the banks. Right now, what we have is a price discriminating monopoly. 80 to 85% of all the money that goes into the foreign exchange market in Nigeria is supplied by the central bank. So you have an artificial market, which does not reflect the reality of the value of the currency. It is managed, it's a managed floating system, which is, like most currencies, is accurate. But what we are trying to do is to transition from this structure to a much more efficient structure. Here, the central bank will only have to intervene as and when necessary. And then the true value of the currency will manifest, and it will also lead to many other equilibrium in many other aspects of the markets in this country. So, in other words, one, is an aspiration. Two, it is a big dream, because what we are exporting today is $61 billion, including oil. And therefore, to take 25% of that, maybe $15 billion, or something like that, maybe, in fact, $7 billion, which is a non-oil, right? To take $7 billion and make it $200 billion is a tall order. It will take some time to achieve that. But in the meantime, what the central bank is telling you is that we are going to be transitioning from this multiple exchange rate method, from this inefficient system to a much more efficient system where exchange rates will be unified and will begin to reflect more of the true value of the currency. At times, the currency will appreciate. At times, it will depreciate. The word devaluation will not come in. That is what I'm saying.
All right, Mr. Ronnie. I mean, unifying the exchange rate is what a lot of people have been asking for. Even the IMF has asked for that. I remember recently they just said that we should remove, the official, like the floating and the managed one. But let's look at it in reality for the man on the street out there. So when the banks have to go, they don't have, I don't know how to put it this way, a certain supply, which is what the CBN is, that they have to go and source in the export. What will it mean? What picture, for instance, an individual wants to access FX, what will it mean to people from then?
Well, let me break it down and simplify it. Today, if you went to the market to buy currency, you will be charged 576 naira for $1, period. If you buy your PTA from your bank, using the official source with all your documents, you will get it at about 415, 417. So there's a big difference between 417 and 560 naira. It's about 150 naira per $1. That structural deficiency encourages everybody to buy money, the PTA, and transfer it and sell it at 576. If you buy an airline ticket today, the airlines will charge you, they will convert your naira into dollars for the ticket at a rate of 444 naira for $1. If you were to bring your money in through the export proceeds window, unofficially, you are likely to be getting 575 naira. This multiplicity and layers of exchange rates does not help the market. Instead of people spending their energy to build exports, they spend their energy trying to see how they can move money from one market to the other and shortchange the system. By starting this transition from an imperfect, structurally deficient and inefficient market to where we want to be, which is the ideal type, that journey starts with the first step. That is what I think. That is what is behind this whole process. Now, you have to start this journey because sooner or later, the country will be mired in this and strangulated by this inefficient structure that we have. So move, I think, first and foremost, the ambition is there, the vision is there. Secondly, is how to get it done. And thirdly, to get the banks and all the players to do this, because if not, we'll be running between BDCs on one hand, banks on the other, oil exporters on the other, airlines. It's just going to be an impossible task. So the most efficient thing is to allow the market determine the exchange rate so that when it's done, I can tell you for sure that RenCap said yesterday, Yvonne Mahango, that the fair value of the naira is about 480. According to RenCap, at 480 naira to $1, everybody should be happy, both official and unofficial. That is what RenCap is saying.
All right. Thank you so much, Mr. Bismarck Rani, CEO of Financial Derivatives Company. Thank you so much for sharing your thoughts with us.
Thank you for having me again. Thank you.
So we'll move away from that now. Electronic giant Samsung has introduced a new range of smartphones with 5G network into the Nigerian market. The latest series of Galaxy S22 Base, S22 Plus, and S22 Ultra were announced at this year's Samsung Unpacked 2022 global events streamed live in Nigeria and other parts of the world. During the event, which was held in Lagos, the company explained that the latest devices represent the smartest experience, delivering cutting-edge innovation throughout the Galaxy ecosystem.
Use the hashtag Samsung Unpacked.
Just like what was obtainable in most previous occasions, Samsung Electronics is using the first Samsung Unpacked global event in 2022 to reveal a new series of smartphones, the Galaxy S22 Base and S22 Plus and S22 Ultra. At the Experience Zone, product consultants take guests through hand-on practicality on what the S22 series has to offer. The Galaxy S22 Base and S22 Plus are pretty much business as usual, taking some cues from last year's Galaxy S21, but with dynamic cameras and advanced intelligent image processing, among other features. The Galaxy S22 Ultra has a whole new design and features. It blends the power of Galaxy Note and the pro-grade camera and performance of the S series with a built-in stylus pen.
With the S Pen, they can easily work, define, paint as much as they want to do with the Samsung S22 Ultra.
The price for each of the three variants are tagged according to their specifications and features. Samsung Nigeria has also made the purchase easier with a flexible payment plan and after-sales service.
If a consumer walk into our authorized dealer stores, they decide to spread the plan. What they need to do is that they make a down payment of about 20%, and then they spread the balance payment either for 3 months, 6 months, or 12 months. However, the exciting thing is that for consumers that will be spreading the balance of payment for 3 months to 6 months, Samsung will actually bear the cost of the interest, which is about 5%.
With the Samsung Care Plus, you're able to repair your faulty screens at a discount. Specifically for these devices, you're able to repair your screens at just 22,000 naira 500.
Pre-ordering any of the Samsung Galaxy S22 series is on, just as the company says it has made them available in all its authorized retail stores.
So let's look at other developments in the business. In our logistics business, which is the management of the flow of things between their point of origin and their final destination in order to meet the needs of companies and customers, is a subset of the supply chain management. Well, what's going on in that sector? What's going on with logistics? We have Mr. Bolaji Onobolu. He's the Chief Executive Officer of First Vending Nigeria Limited, joining us to bring us up to date on what's going on there. Good morning, Mr. Onobolu. Good to see you.
Good morning. Thank you.
Yeah, so with COVID, a lot of things went virtual, but I don't think a lot of that happened in your sector. We still have to move things about. What difference has COVID brought to your business?
Well, for us, in the haulage space, COVID, I'll look at it from two sides: an advantageous side, the side where we had some advantages, and then the side where we had some losses. Let me start with the good side. The advantage we had was that, number one, you find out that depending on the sector where you operate within the space, the haulage space, if you recall, there was a lot of movement of palliatives, for example, even at the heat of the COVID.
Especially food items.
Yes. So the industry was there to move the items from the source to the respective warehouses in the States. We also, my company, we also partake in the oil and gas sector, and we move gas, LPG, and whereas people were at homes and more food was eaten and more cooking was done, more gas was also burned. So
that was more business for you?
Yeah, in a way, yes. Yes. But then some other areas, for example, we work for some oil and gas companies. We move lubricants for them. And when nobody was moving, the cars were not working, nobody was servicing, no oil was being changed, no oil was drained.
Yeah.
Everybody was at home, fewer cars on the road. There was less purchase of lubricants. So in both ways, the good and the bad, but at least we're able to strike a balance. So I would say overall, yeah, we had some benefit.
But have you had disruptions? Have you had any changes with COVID?
Now, COVID, again, I would say, changed the pattern of purchase for some certain items. Fortunately for us in Nigeria, it wasn't so severe, so we thank God for that. But apparently, I would say that when COVID was high and the cost of energy was low, the international price of fuel fell, yes, crude, and all that stuff. So I remember we're buying diesel, I think 2020, middle of 2020, we're buying diesel for about 180, 185 naira. Now, things have gone back to normal. And as of today, diesel is 400 naira per litre.
Yes.
So that's a big jump.
17%. I know we talked about that a couple of days ago.
Big jump. 185 in 2020 June to 400, 2022 February. I mean, that's well over 200%. Massive change.
Yeah.
So, but again, like I was saying, that all in all, we are striking a balance, but it's more difficult for us now, post-COVID, than during the
pandemic,
yes,
the heat of the pandemic.
Yes,
because we still have the pandemic here.
Yes,
now, one of the challenges that has been talked about, especially in your line of business, is infrastructure, because you move a lot. So you have to deal with roads, you have to deal with law enforcement agencies on the road. Share with us what's going on in there.
All right. Okay. Very nice question there. I will first of all let us, take us through the road infrastructure. Nigeria today, our total square meter. Nigeria is 923,000 square kilometers. In the geographical position of Nigeria. Today, of 923,000 square kilometers of landmass, Nigeria has only about 190,000 kilometers length of roads. Let me give you a comparison. South Africa has a geographical land space of 1,200,000 and something square kilometers. But South Africa has 750,000 kilometers of road network. In fact, South Africa is rated among the number 10 in terms of countries with the longest network of roads. South Africa has a population of just about 70 million. So when you look at the average, when you look at the ratio between the length of kilometers and the total square kilometer of the country, South Africa has been able to produce and pave roads that is almost 62% of the total country land mass. So let's come to Nigeria. Nigeria is 923 square kilometers, and we have 195 or 190,000 kilometers of road network, which represents about 21% of our land mass. We have 200 million people. Now, Ghana has 230 square kilometers in coverage. Ghana has about 60 million kilometers of road network, representing about 28%. So Ghana is a smaller country with a population of not more than about 35, 40 million, already has a better ratio of road network too. Anyway, let's leave those ones. Let's come to Nigeria. Of the 190,000 kilometers length of road that we have, you'll be surprised to find out that about 130,000 kilometers of that is actually rural road, unpaved. We have about 30,000 federal roads, 30,000 kilometers of federal road, and about, I think, about 35,000 of state roads. So that's
what's this costing the economy?
Okay. Let me put it this way. Today, prior to when there was a concession given to Dangote for the Apapa-Oshodi Expressway, let's take it from Alakpere all the way down to Antoni to Oshodi, all the way down to Mile 2, all the way down towards Apapa. It took hours for people to move. But today, with the road now built with concrete, it's smooth. If you look at the Lagos-Ibadan Expressway, before this ongoing reconstruction, it will take you an average of about between 3 to 4, 5 hours, even sometimes unpredictable number of hours to move from Lagos to Ibadan. But today you can safely say 1 hour, 30 minutes. You are probably most likely to be in Ibadan. That's exactly how it is. Now, for us in the haulage business, one very key factor is turnaround time. If you are investing in the industry, your vehicles must be constantly on the move. The more movements you can make within this time space, the better your profitability and the efficiency. So you find out that if you have to spend, there was a time there was a bridge that got broken somewhere in Niger State, And for one whole week, all trucks moving between the south and the north had to suspend their movement. It's painful that you see some pictures of how dilapidated our roads are. You will see drivers, they will come out of their vehicles, begin to put stones and, just to be able to pass. Definitely a journey that between Lagos and Kano, which is about 1,200 kilometers, should not take a truck more than 4 days. The loading time, the travel time, arrival time should not be more than 4 days. By the time it's coming back empty, and of course, when they are traveling, they need to be more careful and, they follow and obey. Yes. So when they're coming back, they are lighter. And so you're talking about Lagos, Kano, 7 days. But where you find a situation whereby they cannot even reach Kano in 14 days.
14 days, 2 weeks?
Yes. Wow. So what then happens? So if you are moving from Lagos to Ibadan, to Jeba, to Mokwa, to Tegina, all those places, it takes you a longer time. So you find out that people even now pass through, Akure, connect onto Lokoja and then head to Abuja because the roads are better.
And this time costs money.
It costs a lot.
Because your customers have targets. They've given you targets and you need to meet up. Well, another issue that you have, I have heard of it, for instance, if we're in a border between Lagos and Ogun State. So if you have a courier service, then they tell you they're permitted to deliver in Lagos, they're not permitted to deliver in Ogun, so, and you have to go across different states. So
I'll give you a story. When there was this VAT issue between the federal and the states, and I think Lagos State and a few another state, River State, got a court order. Everybody misinterpreted it. So we were loaded, a truck was loaded from Lagos, consigned to Enugu. They got to Onitsha, and then the Onitsha people came and said they should pay them VAT. They demanded 15,000 for every truck that will pass through Onitsha. The goods were not consigned. So even if the states were allowed to generate their own VAT, you generate it only from where you are expected to drop the goods. But when somewhere being between, you have to, and then there is no, how would you get to Enugu State without passing through Anambra? So the people took laws into their hands. When the drivers refused, they would beat them, and these people are with policemen. So that's one side of it. You mentioned taxes. Every January, the average operator will vote about 40,000 for every vehicle in your fleet, every single vehicle. So when
Does it go to the government?
No, that's the problem.
Wow.
There was a joint task force. So when you get it, if you obtain your stickers in Lagos, it's meant to cover you all the way through Pan-Nigeria. But you'll be shocked. You get to the east again, I'm sorry to say, you get to the east again, the boys will tell you that, sorry, this one, emission, this one, mineral, this one, on per deck, you've not gotten it.
All right, Mr. Nobolu, we really have to get you to come and talk about this again because the time is really against us. We have a shorter time. Thank you so much, Mr. Bolaji Nobolu, Chief Executive Officer of First Vending Nigeria Limited, for sharing your experience with us. And we do hope that with the conversations going on around this, that some things will be done. Well,
but I must say it's getting better, though, because we've never had it this good in terms of efforts being made to ensure that there are improvements on the road. Things are getting better.
Okay, thank you very much.
Thank you.
So we'll take a break now. When we come back from the break, we'll be talking about mopping up of unemployment in Nigeria. What sector? You find out. It's Business Morning on Channels Television. You're welcome back. Well, the International Monetary Fund has stated that Nigeria's reported unemployment rate as at the end of 2020 are yet to come down. However, it cited that recent COVID-19 monthly surveys shows Nigeria's employment is back to pre-pandemic level. Well, one area seems to be mopping up a huge number of unemployment is the fintech space. And to tell us how they are doing that, we have the Chief Executive Officer of FINA, Ashley Emmanuel, joining us now. Hi, Ashley. Good to see you.
Hi, good morning. Thanks for having me.
Yeah, so you guys are doing so well. A report shows that over the past decade, financial technology services had about 200 registered startups. So a lot of people are going to that space. Is this COVID or something else that is driving everybody to the startup fintech area?
So I think it's a combination of factors. I think COVID, reshuffled the market maybe and created some opportunity. But fintech has been sort of active and growing in Nigeria and across Africa for some time. So with the emergence of new technologies and a lot of unmet need and opportunity in Nigeria, fintech has been there. I think COVID helped sort of push us a little bit more into digital space. So we saw pretty fast growth in things like digital payments, and customers had to try some more digital channels. So there was some new opportunity that emerged when the pandemic came about.
Yeah, so eyes just got open. And I feel does a lot of research and reports. So tell us, how is that space now? I think we can still say it's relatively new. And then we have issues of infrastructure, of policy. I know the startup bill is awaiting the assent of the government. So share with us your experience in that space.
Yeah, so we've seen, as you mentioned, FINA does a lot of research. FINA is an organization that focuses on financial inclusion in Nigeria. And we recognize that fintech really has a lot of potential for driving financial inclusion. So we've done some research to kind of understand the landscape and the potential for fintech. And you're right. So we've seen that the sector is growing. We see that there is still a lot of opportunity and unmet need. So, for example, FINA does nationally representative surveys, and we measure financial inclusion. And we've found that although financial inclusion has grown, 36% of Nigerian adults are still completely financially excluded. Even the people who are 45% of adults are now banked. Even the banked adults might not have all of their financial needs met, and they may not be completely happy with their financial services. So there's really a lot of opportunity in the market, and our research has found that fintech has the potential to really drive financial inclusion by bringing new business models, by reducing prices, hopefully introducing models that make it more sort of viable and profitable to serve those last mile, lower income Nigerian adults who currently aren't being reached by the financial system.
Well, someone has said, I had this conversation, a similar conversation yesterday, and someone said that it's not about financial inclusion, it's about economic inclusion. So is FINA looking at that from that perspective? So it's not like people just don't want to be banked or don't want to be financially included, but the economy, it's...
Exactly. So financial inclusion, I mean, we focus on financial inclusion, but it's a means to an end. We don't want people to have accounts just for the sake of having accounts. The reason that financial inclusion is important is that it can lead to economic growth. So, for example, some research has shown that if we had full use of digital financial services in Nigeria, GDP could increase by 12%. We know that for individuals and for micro enterprises, if they're financially included, if they have access to really a wide range of affordable and relevant services, they can grow their businesses, they can grow their income, but it can also lead to other sustainable development goals. So financial inclusion can open access to healthcare, open access to education, even things like energy. So for example, there are sort of innovative models around what we call off-grid solar. So somebody who they don't have light in their house, they could use solar panels, but it's really too expensive for the household or the business to purchase. So there are new models that allow the household or the business to kind of purchase the solar panels and the infrastructure and then pay for it daily or weekly. but you need a financial solution, right?
Yeah.
You need those.
You need to be financially included for you to be able to access
Exactly. You need to have like a mobile money type account to make those daily or weekly payments, because those households aren't going to travel for 2 hours to go to a bank branch every day to make those small payments.
How much of a competition is fintechs to the banks?
So it's really interesting, because sometimes people ask this question, and our research and other research has found that really, on balance, fintech presents more opportunity for the existing banking sector than a challenge. So of course, there's always going to be change, and the banks, like everyone, really need to evolve. But we've seen that there's a lot of opportunity for banks to partner with fintechs. So, for example, we've seen in many countries across Africa, mobile money has really taken off. And oftentimes, mobile money really drives financial access for some of those last mile customers that didn't have access before. Oftentimes then, so the initial sort of company that reaches those new customers is a mobile money provider, but then the banks come in and partner to provide credit. So now the banks actually have access to a much wider range of customers because the fintechs have brought new customers into the market.
And they now, complement their services and all that. So the International Finance Corporation has shown that the fintech sector, was able to raise $122 million. Is it that easy to raise?
Yeah, I'm sure if you ask some startups, they'll say no. I think it's a really interesting time in this market, because we do see kind of an acceleration around fundraising in the fintech sector. And actually, I've heard recently, some Nigerian investors have said even more foreign money wants to come and invest in Nigeria, but their challenge is actually finding investable businesses. Sometimes foreign investors also get scared away if they're uncertain about things like regulation or the business climate. So I think that there's definitely money coming in, and I think that there's potential for a lot more if we address some of the challenges around streamlining regulation, both in the financial sector and, as you mentioned, just kind of ease of doing business type of regulation. And there's also domestic money. We see Nigerians investing, and I think there's maybe even more interest from some Nigerians.
I think from my findings, it's more of the foreign money. So in the fintech space, it's more of the foreign one.
We have both, and there might be, the volumes are probably sort of different. You might have kind of larger amounts that we're able to mobilize. I know earlier in this segment, you had something on the screen around bringing in foreign exchange. So that sort of highlights the opportunity for emerging technology and fintech to also be bringing in foreign capital as well.
And then what are your expectations from the startup bill? What areas would you prefer that the bill caters for? Because, like you said, one of the fears of investors, especially the foreign one, would be the stability of the policy environment and all that. What are your expectations from the bill?
I mean, specifically for the bill, I think it's a little hard to say. I know the bill has sort of evolved, and we'll sort of see kind of what its path is. I know one of the things that they're looking at is tax treatment, for example. So it's important, as an economy grows, we have to all pay tax. At the same time, I do think it's important to sort of get the balance right.
Yeah, because they also say they intend to make the bill to make the environment easy for startups.
I think that really, the Ease of Doing Business Index is a good tool. And I know that even before the startup bill, there have been some kind of policy initiatives around improving ease of doing business. So I think that if the government, and that's in place right now, if the government can start kind of ticking off those boxes and making continued improvements for ease of doing business, that'll help. We all complain about electricity, right?
Yes.
and startups.
Not just the fintechs.
It's the entire economy.
Yes, yes.
So that's one example. Just making it easier to go through all of the bureaucratic, processes we have to go through. Making also kind of regulations more predictable would help, and I think that's an easy area. At a minimum, kind of increasing communication between the regulators and the industry, so that there's two-way feedback and that the companies just at least know sort of what changes are likely to come down the pipeline.
Is what I hear you
exactly,
saying.
Yeah.
Well, thank you so much, Ashley Manuel, CEO FINA, for sharing your time with us. Really appreciate it. And we wish you all the best in the fintech space. We do hope to create more jobs.
Yes,
get the youth employed. Thank you.
Thanks very much.
All right, so now we will be doing an opening call to the market. We have Will standing by with some good news this Good Friday.
Good morning, Ini.
Good morning.
As we said yesterday, we talked about how the market was going to be sustained, and we saw that market was bullish. We're hoping today it continues, but yesterday is more than enough, good news for the market. Equity sustained the positive trading. The all-share index advanced by 0.27% to 47,286.34. It's upping on that level now. We're thinking we're going to get to the 48,000 level, hopefully. And it was supported yesterday by investors' interest in first FBN holdings. We saw Guinness up 10% yesterday. Total Energies was also up 9.92%, and Zenith Bank was up 1.1%. So the big caps are really moving the market. Consequently, we see that the month-to-date and the year-to-date gains have also moved to 1.4 and 10.7% each. Now, the total volume of transactions yesterday, where the turnover was not very impressive, but that didn't actually stop the market from, getting us, to that green territory that we saw there yesterday. And now we saw that the banking, across the sectors, the banking was up, consumer goods was up, industrial, all key indexes was broadly up, except for the oil and gas, which closed flat yesterday. Now we move to the fixed income space, where we saw some, mixed sentiments there. There was more demand we saw demand for the 2026 paper there, and then there was sell-offs for the 2034 paper, and that's why it dropped by about 9 basis points, and this was up by about, I think, 12 basis points was added to the 2026 paper. But we have Chuka Nwachukwu, is the head bonds trading at UBA, to tell us what happened, especially with the OMO auction we had and the Ntb auction that took place this week. Good morning, Chuka.
Good morning.
Chuka, we had the OMO auction yesterday, as I was saying, where 80 billion naira was offered and allotted. Can you talk to us about this?
Okay, so like you said, there was an OMO auction yesterday. It was 80 billion was on offer. This was an increment from the usual 30-40 billion that has been usually been offered over the past few weeks and months. So we saw that the rates also remained the same. So what does this mean? It obviously means that the CBN is trying to make the OMO side of the market more attractive. Though we saw that this week actually about over 200 billion of maturity worth of OMO matured. Though the 80 billion was on offer and sold at the stock rate of 10.1 for the long end. Also this week, we also
Chuka, could you just talk about the OMO? Why that much? What does it imply? Does it mean that because we know that OMO is for institutional investors and not for retail investors, or more foreign investors? Does this imply that we have more foreign investors coming in?
Yeah, that's what it means. I mean, for the significant increase from 40 billion to 80 billion, it means that a lot of inflows are coming into the market, which is good for the economic development.
Okay, so now we're going to talk about the Ntb auction results now, where we are seeing a continued drop in stop rates. What does this imply for the market, especially for investors?
Okay, so we on Wednesday there was an Ntb auction where 80 billion was on offer, and then over 200 billion was sold. Like you said, we saw a drop on the rates from 5.39 on the long end to 5.2, for the longer end, which is 1 year. So what this means is that obviously there's a lot of liquidity in the system. A lot of people are running into the available space, especially on the CBN, especially on the longer end of the curve, to start reinvest some of this liquidity. Otherwise, you take them back to, you give CBN debit yield for CRR for 0%, and so it makes a whole lot of sense for people to just buy whatever security they can buy at within this range. We even saw that played out on the at the secondary market, where rates drop as low as 4.5 and 4.7 levels. And so this has been the case as long as there's liquidity in the system and people have a lot of money to invest. We see this rate hover within this low range.
Okay, thank you so much, Chuka, for your insights. We don't have time to take so much of what, we have a lot to say today, but probably we'll talk about it next time. Ini, that's what we have for the markets. The bond auction is going to take place next week. We're hoping that we'll see, or maybe it's not going to be oversubscribed. Oh, if that's the word in town now.
Yeah, but I was going to say that it's not just about taking it next time. Tomorrow we do have capital market at 7 p.m. So you can have, I think Gladys will be on.
No, I'll be there. I'll be there.
So you see. So we will be here tomorrow, 7 p.m. during Capital Market to give you a robust conversation on happenings in the market. So please do join us then, and you can get a full dose of what's happening in the trading and what we expect next week. Thank you so much, Will.
You're welcome.
So now we'll take a break. When we come back, we'll do an opening call to London. Juliana is standing by. This is Business Morning on Channels Television. You're welcome back. Well, the UK economy is back to the February 2020 levels as revealed by the December GDP, exceeding its pre-COVID levels in November. We have Juliana joining us now to give us the details of that. Hello, Juliana. Good morning.
Good morning, Annie.
Yeah, so a 0.2% drop in December. What are the outstanding factors here?
Yeah, it's pretty interesting because if you read the British business headlines, the headline is that Britain is now the fastest major economy experiencing growth, but it's more than that. I think the statistics are rather distorted. Yes, in 2021, according to the Office for National Statistics, the UK economy rebounded by growing 7.5%. But, of course, we are comparing these figures to the previous year, which was the worst recession that the country had experienced in over 300 years. It contracted by 9.4%. So you've got to really zone in on those figures to paint a better picture. And what we can see is what you were quite rightly saying. We saw a contraction in December of, I believe, 0.4%, a little less than what economists had anticipated. But there are some individuals that are saying this can't just be blamed on Omicron. The entire world was facing Omicron, and exports are really, really a huge problem. Exports from the UK fell by about 18%. We're having serious problems with Brexit, which a lot of Brexiteers wouldn't want to discuss, but it's absolutely true. We've had a look at Anglo-German trade, which is falling month on month. We're not seeing the buoyancy outside of the EU that one had predicted. But again, a 7.5% growth, even though it's slightly distorted, is still seen as a positive in this country.
Yeah, I'm talking about 7.5%. That's the inflation that came out from the U.S. yesterday, a bit more than what analysts were expecting at 7.3%.
Yes, we know inflation is the buzzword of the moment, and it's likely to continue for the entirety of the year. As you said, I think economists had priced in a similar amount, but it still came much higher than expected. Again, this can be blamed on the price of second-hand cars, volatility sectors such as grocery prices, gas prices, the cost of renting a property. These are really, really creeping high in the US. In fact, I believe this 7.5% figure is the highest figure that they've seen since 1982. So there are issues. And I think for investors now, all eyes once again are on Jerome Powell and the Fed. What are they going to do? I think a lot of people are now predicting and projecting that there will be a substantial interest rate hike, probably by about 50 basis points. But we all have to wait and see. I think, inflation is not something that's solely happening in America. It's being experienced across the world, currently at 5.4% in the UK. Although the Bank of England, that have a much more forensic eye on the data, show that it's really running at about 7%.
Wow. Same here in Nigeria. Well, thank you so much, Juliana. I'll talk to you again at 1:30 during Business Incorporated.
Thanks, Annie.
So let's move to the crypto space now. I can't remember if we did a prediction yesterday.
Yeah, your crystal ball, yeah. You didn't give me a straight answer, I believe. Yeah.
Oh, okay. All right. But, so what do we have?
Yeah, we have red.
Oh, red, my.
That US
my.
CPI didn't sit well with the market.
Yeah.
There was a lot of volatility yesterday. We saw Bitcoin dip all the way to about $43,000 after the US CPI came out. So, but it did spike back up, but now we're back down again. Friday, saw red.
Is the Friday cap, gloom?
The Friday, yeah, the Friday. We see the market cap there's lost that $2 trillion mark. It's down about 2.31% this morning. Volume traded $115.24 billion, up 40.05%. And see Bitcoin dominance, 41.73%. Price of Bitcoin this morning, $43,267, down 1.56%. And the volume traded $34.90 billion. Some traders still say Bitcoin is still primed for bullish move. As long as it holds the 42,800 mark, then we can still have some uptrend there. Price of Ethereum, $3,079. Looks like it's trying to lose that $3,000 mark. It's down 3.33%. Volume traded $19.79 billion in Ethereum. Let's bring in Michael Inaji now. Hello, Michael.
Hello. Happy Friday, already.
Happy Friday, Michael. Happy Red Friday. Good to have you. Well, Michael, we did have a flurry of good news for the crypto industry this week. First was Blackrock, asset manager with over $10 trillion in assets, says it's going to give offered crypto trading to its customers. Is this the institutionalization we've been asking for?
Yes. So Blackrock said that they're going to be offering crypto trading through their platform called Aladdin. And so the reason why this is fairly important is because Blackrock doesn't cater to retail type investors. They predominantly deal with institutions, sovereign funds, big pension funds. They're basically an asset manager for institutions. And so when you have the largest asset manager in the world coming in to say that they will be basically offering crypto trading, it makes you realize that no one wants to be left out. The rationale behind it is basically because they're seeing the flows of money into other companies for people who want to purchase digital assets. And so this is just a way for them to gainer into that market share. And so it's just, the realization is now most people realize that there's no more career risk with associating yourself with some kind of, digital asset. It's actually a career risk not to associate. So, now I think it's mostly been de-risked in terms of the negative consequences of Bitcoin's only for criminals and so forth. It's been really clear now that, Bitcoin is a tool that, investors can use to basically, protect their portfolios.
Quite interesting. And talking about bad actors in the space, we saw Bitfinex funds got finally returned after about 6 years. Does it mean, bad actors cannot capitalize on the privacy of cryptocurrencies?
Yeah, that's exactly what it is. Blockchains are, public ledgers that anyone can have a look into. And the things the criminals did wrong is basically they tried to launder the money in 1,000 different ways. But ultimately, the mistake that they made was they used an account in their own name when they thought they finally had cleaned the money. And so what investigators did was when they figured out these individuals were trying to launder stolen funds, they looked into, they basically got, like a subpoena to basically monitor them. And so in that subpoena, as they were monitoring these individuals, they had access to one of their cloud servers. And in their cloud servers was the private keys, which makes you laugh because, these people are so-called money launderers, but they did the number one pool of crypto, which was leaving their keys on, not in cold storage. It was online in a public domain. And so what the investigators did was when they finally linked the private keys to these money launderers, that established the trail that they needed to basically arrest them. Had it not been for the keys in their accounts, they probably would have been fine. But just for the sheer fact that they found the private keys to about 94,000 Bitcoins, the reason why now they're under arrest. So no criminal is safe from the eyes of the law, especially when you deal with something as public as Bitcoin.
All right, Michael. And it was interesting to see that when the feds, took a picture with the money, it was just a flash drive. It wasn't stacks of cash. All right, Michael. Thank you so much. Enjoy the weekend.
Thank you so much, Harry. Have a good weekend.
All right, Ini. So looking at the top 5 gainers, we see it's just Theta there, up 27%. It's not looking bad, but we're having that pullback, and it's a red Friday, Ini.
It's a red Friday. Hopefully by Monday, over the weekend, we'll recover, and then on Monday, we'll start the journey again.
Start all over again.
Thank you so much, Ladi. Well, that's it for Business Morning for this week. It's been an interesting one. So glad you were part of it. Let's do it again next week. I'm Ini John Mekwa.